Hello to everyone. We are in conversation with CA Pramod Jain, and we will be very briefly touching upon the most sought after topic at this time of the year: who are supposed to file their income tax returns.
Thank you, Nikita. Namaste to all. Yes, please.
So let's start with the very basic. Who is supposed to file an ITR in India?
Uh, Thank you, Nitika. In fact, any person who is having an income in India should file his ITR. So any person, whether individual, HUF, firm, LLP, company, AOP, BOI, artificial judicial person, they have to file their return if their total income is exceeding the maximum amount not chargeable to tax. However, in case of a company and a firm, they have to file their return even if they don't have an income which is exceeding the maximum amount not chargeable to tax. So suppose you have created a partnership firm and there is no transaction during the year and you are having the time, then still you have to file the ITR. You have to file the ITR. A partnership firm, LLP company, they'll have to file.
Even if they have been incorporated just a month before the
Yes.
beginning of financial year?
Even if they have incorporated on say 25th of March, the return is to be filed for the financial year 1st April to 31st March. So from 25th March to 31st March, they have to file the ITR.
So we have also come across questions from clients wherein they say the threshold of not paying tax on an income has increased to rupees 7 lakh rupees. That is, if my income is below 7 lakh rupees and my tax liability comes to nil, do I still need to file my ITR?
Nitika, this is a very, very important question and interesting question. To be very frank, this 7 lakh limit is there in the new regime for the individuals and HFs, right? AOPBYs. But for other than the new regime, the limit is 5 lakhs where you get the rebate under section 87. But who is required mandatory to file the ITR is where any individual or an HUF I would talk about, other than a company and a firm, an LLP, if they are having the total income exceeding the amount which is not chargeable to tax without taking into consideration any incomes under section 10A, 10B, 10BA, 1038, though it is not applicable, but yes, as per law, and all the sections of 54, basically 54, 54F, 54EC, 54G, GA, all those, and chapter 6A deductions. Now, normally what happens is someone says, I have got a immovable property of 50 lakhs, a residential house property, I sold it that for 1 crore. So I had a gain of say 50 lakhs. I reinvested into another property of 1.5 crores. So there is no taxation. But without giving the effect to section 54, it is mandatory for them to file the ITR.
For those having taxable income are aware that they need to file their taxes. But are there any exceptions to it? If I don't have any taxable income, do I still need to file my ITR?
Yes, another very important question, because we just said that in case your total income is exceeding the maximum amount not chargeable to tax, then you have to file the ITR. But there are provisions under the Act, Section 139 itself, which says that suppose you have deposited more than 1 crore rupees into one bank or more than one bank in aggregate or cooperative banks, then also you have to file the ITR even if there is no total income exceeding the maximum non chargeable tax, or you have deposited into the saving bank more than 50 lakh rupees in aggregate, or you have incurred an expense for foreign travel for yourself or for any other person exceeding rupees 2 lakh, or you have incurred an expenditure for electricity for more than 1 lakh, then in all those cases, of course, you have to file the return even though your total income is not exceeding the maximum amount chargeable to tax.
So another question that I came up was, I am an NRI having an income of 1,30,000 and TDS deducted is rupees 26,000. But I do not wish to file my income tax return as I don't want to get into the hassle. The government can just keep the TDS. Is it mandatory for me to file the ITR?
Yes, very, very important question here. Because we just discussed that if in case my total income exceeds the maximum amount not chargeable to tax, this is a non-resident individual. So his income, you said that it is not exceeding 2,50,000, so it is not applicable. However, his tax has been deducted of 26,000, which is more than 25,000. So there is a provision under the Income Tax Act with the notifications, with the rules, that in case your TDS is deducted or TCS collected more than 25,000 in a year, then still, even if your income is not exceeding the maximum amount not chargeable to tax, you have to file the income tax return. It is mandatory.
So we often get queries from our NRI clients that dividend is paid to them and tax is deducted as per DTAA. They don't have any other income. Do they still have to file their taxes?
Nitika, yes, another very, very important point which everyone should take care, including the non-residents or the foreign companies, that in case their tax is deducted as per the double taxation avoidance agreement, DTAA, then they will have to file their ITR in India. They won't get any exemption if their total income is exceeding the maximum not chargeable to tax. A simple case, I say there is a company to whom you pay a royalty. This is case of a dividend. In case the dividend is exceeding 2,50,000, they have to file the return. Had the TDS thereon deducted as per the Income Tax Act 115A, then they were exempted to file the ITR. Otherwise, they are not. They have to file the ITR. In the case of royalty, FTS, where TDS is deducted as per the DTAA, then they have to file the ITR. In case it is as per 115A and there is no other income, then not required to file. Otherwise, they have to file.
So if my business receipts or turnover is rupees 70 lakhs and my net income is 2 lakh rupees, so again I am below the threshold limit, do I still have to file the ITR?
Yes, another good question. Again, the rules related to my 1/3 section 139, the rules is, well, prescribed it is, that in case your business receipts, your sales or turnover is exceeding rupees 60 lakhs, so is irrespective of your profit, you have to file the ITR. In the case of profession, that limit is 10 lakhs. So irrespective, if you are having a profession of, your professional receipts of 10 lakh and you are having a loss, still, say more than 10 lakhs, so 11 lakh, 12 lakhs, still you have to file the ITR. It is mandatory to file the ITR.
One last question that would interest all of us. What is the penalty if we do not file it before the due date?
Nitika, another important question, of course. There are two things. One is a penalty, another is a late fee. Late fee, everyone knows, there is a section 234F where it says that in case my total income is exceeding rupees 5 lakhs, then I have to pay the late fee along with the return I have to pay, that is 5,000 rupees, and if it is less than 5 lakhs, then I have to pay only 1,000 rupees. However, in case of section 276CC, there is a provision that in case I have not filed the return and my tax due is more than 10,000 rupees, after allowing all my advance tax, self-assessment tax or my TDS, in that case, if the tax due is more than 10,000, there is a prosecution. This limit of 10,000 rupees is there for other than companies. For companies, there is no limit. So, if in case of a company, you are not filing an ITR, 276CC, there can be a case of prosecution which can be launched. So, please file your returns.
It was indeed an enlightening bullet session, if I may call it so. Thank you so much, sir, for sharing your knowledge. It is surely the need of the hour.
Thank you, Nitika. Just one point before we close. Because in ITR, when we are filing, we sometimes miss out to file the foreign assets detail, which may result into the application of Black Money Act, right? So if you are having shares outside India, bank account outside India, signatory to a bank account, please fill that schedule in your ITR.
And cryptocurrency.
Cryptocurrency, whatever, any asset. So please take care, fill that point very well.
Thank you so much, sir.
Thank you everyone. Thank you.